From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 27, 2016. Today we're going to be taking a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. Starting here on the weekly time frame, I know we're zooming out to the weekly time frame so we can get a longer term perspective first, and then we'll go down to the smaller time frames. But if you look at it here on the longer term time frame, right there in the middle of the chart, since 2014 we were in a downtrend. Not too hard to see right smack in the middle of the chart. Pretty aggressive downtrend. And then probably most importantly, since January of 2015, so that's January of last year and a half, we've been inside the range, the red box at the very bottom of the chart. And that's probably the most important part about this, because we've recently come off of the top of that red box and started working our way down. Why is that important? Well, the last time the market did that, and let's zoom in a couple of times, the last time the market hit the top and went down, it broke through this red trend line along the black trend line and continued all the way down here towards the 1.0500 level at the very bottom of that big red box. Now we bring that over to the right hand side, we can see we were in an uptrend. We went all the way to the top of the range towards the 1.1500s, and recently we've been coming off of the top of that big large range from the weekly time frame and continue to break down through the red trend line again, and now we're continuing to break down lower lows. So as we look at the pattern set up over the past year and a half, we saw the rise to the top of the range and then the fall to the bottom, a rise to the top of range, and now we see it starting to work its way back down. So that's the direction that we want to focus our efforts in on the smaller time frames. Now that it's starting to go down, we want to begin looking for opportunities to go short, selling and targeting the bottom of the range. We don't know if it'll make it down there or not, but that's going to be our a potential long-term target here for the euro dollar. Now let's take it down to the 4-hour time frame, and let's get it back to our current time. We can see over the past several weeks we've seen the continuation of that downward slide, even over the past few days. You know, the past week or so has been very slow in the market, kind of sleepy in the market. Really, if you go back 1, 2, 3, 4, 5, 6 candlesticks, 6 or 7 candlesticks, we were just sitting inside the blue shaded area, which is right around the 1.1000 level to 1.1025. It dipped all the way down to the 1.0950 level, came right back up into 1.1000. So for the past 5 or 6 days, we've just been waffling either side of 1.1000 without any significant headway. But I still think we have some opportunities for the day today, because clearly right now, today, yesterday, and Monday, the market has been holding 1.1000 as resistance with a cap there at 1.1025, the top of the blue shaded area. So what we want to do is look to take advantage of maybe some of this bouncing around until the market becomes trending again. We want to focus in the direction of the trend, and we want to look for opportunities to go short in the direction of that trend. So we're going to sell on any bounce or run into that resistance level, the 1.1000 level. So let's go ahead and put a black arrow. We want to sell into the blue shaded area. That is that 1.1000 level. We know what the risk is. What's the risk here in this scenario? The risk is that it breaks above here, which it hasn't done for the past 3 days, by the way. The risk is it breaks above 1025 and starts working its way back into the 1050s or 70s, this yellow shaded area here, and I'll drag that over as well. That becomes a potential resistance on the breakout above the blue zone. Of course, if it does go back down, we would want to target the next support level, which is 1.0950 or so, all the way down to 0.920, the orange shaded area. So we know what our risk is, the break back above the blue zone. We know what our potential entry point will be, as close as possible to 1.1000, and we know what our potential target will be, the orange shaded area or lower. All of that in the direction of the trend. 4-hour time frame doesn't really change any of that, just gives us a little bit more detailed look at that 1.1000 level, how we've already seen it come up into there today. I do have a pending sell order right at 1.1000, but I don't think anybody's going to argue the fact that if you get in at 1.0995, that's going to be okay as well. You just don't want it to break back above 1,000 if you decide to get back into this. So our stop loss or our risk here on the trade is going to be just above the blue shaded area, because, and that's fairly minimal risk, truthfully, just above the blue zone, because we know we don't want it to get back above there. We're going to stay underneath there, head back down towards the orange zone today for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.